There he is. There he is. Okay. Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is Sunday, June the 12th, where each Sunday we have the opportunity to conduct a week in review and take a little look to the week ahead. There's certainly no shortage of sort of headlines to grab from last week, and I'm going to kind of bucket them in two areas, and in some ways they're obviously aligned and colliding, but nonetheless, let's try and unpack them separately. Geopolitics and inflation. Dr. Lee Chen Sim, Assistant Professor, Khalifa University in the UAE. Good morning. And we'll kick off, Dr. Lee, with one of the sort of dominant continuous narratives of the last few weeks. Got a bit more elevated last week, and that is the idea of a rapprochement between Washington and Riyadh, particularly between President Biden and Crown Prince Mohammed bin Salman. Your outlook for the efforts that are being made to put that meeting together, what it means, what's likely outcome, your thoughts on that?
Thank you again for having me here. Yes, lots of move on that front with Biden possibly coming, and then, postponing the trip. However, it pans out whether or not he appears to meet here in Saudi or at the sidelines of a meeting around the region. I don't think that it's going to change very much, at least for American gas prices. That's because the rise in American gas prices, yes, it has to do with supplies being tight, but as well as a question of refining, right? That there's just no room to go anymore in terms of refining. Some of the refineries are closed. That's why the refinery margins are really high, which hits on U.S. gasoline prices. So I think whatever moves there is, it's more of a political move, an attempt to be seen to be doing something, which is of course very important in terms of optics. But really, in terms of affecting or bringing down the gasoline prices in the US, I don't think much is going to change on that end.
Dr. Aldo Flores Quiroga, former Deputy Secretary of Energy for Hydrocarbons at Mexico's Ministry of Energy. Dr. Aldo, the other big sort of geopolitical story amongst a list of them last week was in your neck of the woods, where we had the Summit of the Americas, and we had the somewhat awkward meeting between Brazilian President Bolsonaro and Joe Biden. Your thoughts on that summit, the alignment or lack thereof of the Americas, if you like, at this very big moment of geopolitics in the world, as you're with us or against us starts to emerge as a fairly dominant narrative?
Latin America is going to benefit from the current geopolitical situation, despite the distancing between some of the Latin American regimes that are non-democratic with respect to the US, which is, by the way, not new. But Latin America is a region that usually benefits when there's commodity price booms. And there's certainly excitement toward the opportunities that the region is bringing for the oil industry. That's where we, besides the US and Canada, where we can really expect oil production to increase. So Brazil is there, well, not exactly Latin American, but yes, in the region in South America. Guyana and Suriname at some point in this decade. Mexico is replacing some of US imports coming from Russia. Venezuela might come back into the market. So I think pragmatism will be, at the end of the day, defining more that relationship between the US and the rest of Latin America. What will be more complex, and sorry to extend myself here a bit, it's really not energy related. I think it's the migration story. The wave of migration that is approaching the US border constantly. It's a source of friction, and it's a complex story in which violence, climate change, lack of economic opportunity are all coming together to push people into this border. And of course, the current situation of the oil market does not help.
Dr. Lee Chen, on this, again, looking at the attempts to rapprochement between Riyadh and Washington, of course, this is much more than trying to jaw down the gasoline price by a few pennies. I mean, there is an attempt to sort of recalibrate this whole relationship that has been in a difficult place for a number of years. And it also, in the triangle, is Russia, right? Clearly, this current OPEC plus agreement that's on the doorstep of expiring now at this summer started with this triangle: Washington, but Trump, then Putin, Moscow, and MBS, the leader, the de facto leader then of Saudi Arabia, but now the more or less the leader. Where do you see those three coming back? How does that, can you put the band back together? Does one of them have to be left out? Does there need to be a divorce? Where do you see that triangle as this meeting is attempted to be put together, and for it to be much more than just, can you add an extra 100,000 barrels, please? No, this is about Khashoggi. It's about, big geopolitical partnerships.
Great question. And I think I'll expand your triangle into a rectangle by bringing in China as well, because China is part of the story. So yes, there is an attempt to reset the whole thing. And as all your listeners know, the US is very much focused on China. Fareed Zakaria said yesterday or a couple of days ago that the way to get to China is to defeat Russia in Ukraine. So that's why I'm expanding the triangle to a rectangle. So the question is, can we get, does Russia need to come back to stay on board for OPEC plus? And the Saudis certainly think so. The UAE certainly thinks so. And let me just give you an example of why. So the Saudis have increased the official selling price of oil to China, to Asia, as well as to Europe. Now, I think part of the calculation there is that if you increase, they don't want to compete with the Russians. So that is a way to keep the Russians on board, because they don't want to compete with the deep discounts that Russia is offering to Asia, 30%, 40% of the barrel. And there is no sense in trying to compete with that. And so the Saudis have wisely said, okay, we'll just kind of, for the moment, in the short term, we'll leave that to the Russians, and we'll go sell our oil elsewhere to other parts of Asia, not to China, but to Japan, to Korea, and all that, which have more on the American view of sanction, or at least are trying to sanction some of the Russian oil. We'll leave the Chinese market to the Russians for the time being. And that's the key, I think. It's for the time being, because I think by the end of the year, they're hoping that things will change because of China's COVID situation. Things will change in America because of the elections, and hence the sanction regime around Russia might be relaxed. And that's when more Russian oil could flow back into the market if there is a relaxation of the regime because of sanctions fatigue. So I think you have to take that China factor into account when you're talking about the triangular relationship as well.
Dr. Aldo, looking at the same framework in the context of your geography, is this a moment, I mean, we're talking about the rehabilitation of a major relationship between the US and Saudi Arabia, Riyadh and Washington, but also where Venezuela, the world's holder of what is defined as the world's largest oil reservoir, also under deep sanctions and broken relationship with the US. Now we've got Russia, the other holder of the biggest energy hydrocarbon reserves in the world, now under deep sanctions, as announced a week ago from Europe. Is there a point, you think, where Washington has to rethink, or is this a moment to relook at these fractures around energy that are, of course, contributing to this very, very high oil price? And is there a moment with Venezuela, do you think, like we're seeing in Riyadh, that Washington and Caracas can find a way forward?
Yes, I think so. And it's not only Riyadh, it's also the negotiations with Iran, the nuclear deal. It's a time to think differently about the oil market, and given the tightness, the search for more sources of supply is increasing. So if it's possible to speak with Iran, and it has been possible to begin conversations with Venezuela, it's becoming less unlikely that we see an agreement with both countries that allows oil production to increase.
I mean, it does seem at some point that the absurdity of the current moment with oil prices at $120 a barrel and the pressure of that on the inflation, where we've got these huge reservoirs being underutilized. There should be plenty of oil available. And we're seeing a certain ideology in Europe, which is, of course, they've come to an oil embargo, but over time, they can't do a gas embargo, even though they are very much, have great issues with Russia. So there is this sense that there's reasons for exemptions. There might be similar reasons to apply. Yes, we don't like the government in Tehran or the government in Caracas, but we are desperate for their energy. So we have to look beyond that. That thinking, do you see that evolving? The politics can remain frozen, whereas the energy can move rather than it being a victim of?
Yeah, I think it's definitely possible, but it also goes in line with this reorganization of the world in regions again. This new form of globalization that is going back to regions, and this makes the Venezuela equation more likely to be addressed in a constructive way with respect to oil markets. But it will continue to be a tense relationship.
Can I add here, Sean?
Dr. Lee, please, yeah.
Sean, that you talked about pragmatism, and I think another point of energy pragmatism that has to be reviewed if you want to get out of this conundrum that you so aptly described is thinking also about nuclear energy, right? If you want to reduce the demand, the huge demand on oil, on gas, you want to reduce the huge prices, then there has to be some kind of rethink about shutting down nuclear plants in Germany, in Belgium, and even in Japan, where it's part of the reason why gas prices are so high. So I think that it's not just about an oil and gas story; it's also about a nuclear story. If you restart some of these plants, you relieve the pressure on gas prices. So that's another thing that has to be looked at.
And of course, Dr. Lichtjan, these are maybe in some cases, I mean, Germany has already said that the 3 remaining nuclear power plants that they have operating are on target to be closed this year, and they're going to stick with that plan to do so, which seems beyond rationale given what they're trying to do in decoupling from Russia. But Dr. Lichtjan, I wanted to get your thoughts, updates on where we are with the decoupling from Russia and Russia's ability to continue to move its energy, both oil and gas, as most of their international partners leave the country.
Well, I think you're going to see some, kind of a shut-in of oil wells as time progresses. So the longer the war drags on, the more there will be shut-ins, the more there will be issues of production, the more there'll be issues of water take and all that kind of thing. So I think the Russians would like to see an end to the war as soon as possible, obviously. So that's one issue that we have to look at. The second issue is that has Russia learned enough from trading in the so-called gray market? Where you have the mid-ocean transfers and that kind of thing. Have they learned from, say, Iran's example? Are they able to bypass some of those kinds of sanctions? And are there countries willing to take that kind of oil? Right now, that answer is yes, because so far there's no secondary sanctions on countries that choose to involve themselves in that gray market. So I think until and when there are tougher secondary sanctions, traders will find a way. Russians will find a way. They have insurers willing to, or at least able to provide shipping insurance, even if the Europeans don't. They have their own ships, their own tankers. So I think it's really if and when secondary sanctions hit, that's when we're going to see, a much bigger problem with Russian oil exports.
Dr. Aldo, on that point, and given those stresses that we are seeing now, obviously 100 plus days into this war in Ukraine, Russia's war in Ukraine, both on food and on energy, we've seen oil prices, which were already high, now elevated to a whole nother level and could even move beyond that once again. How is that playing out we're seeing in the US on Friday, inflation published, again, higher, markets crashed. How does that play out throughout the Americas at this time and looking forward? And how does it impact policy?
It's similar. I guess that the only place where we're not seeing such a pronounced increase in prices is Brazil. That might be temporary. The full region is connected to the world market. So I expect this to continue happening. But one observation I'll have about this also week in review is, because you mentioned US inflation and the like, is that, every single day, headlines are changing so much, and it's very hard to know where things are going right now. I mean, just 2 days ago, actually it was on the 9th. So it was on Thursday. On Thursday, that the expectation was that China was coming back and that the US economy was very strong. And then on Friday, the expectation changed. The inflation report was not encouraging, and China going back to some forms of lockdown. So it really is just an example of how volatile is the situation. And it's very difficult to figure out where the direction is going.
But Doctor, I would sense that we're seeing a sort of willful optimism at certain moments, like the China reopening. And there was one in America for the last month. Inflation is peaking. That was another fairly dominant headline. And of course, these are underpinned by fairly dominant realities. There is a war in Ukraine. You don't, whether China goes to the shop and buys a cappuccino or not, the world's bread basket is locked and closed. Dr. Lee-Chen, your thoughts on that, this inflation sense that, the markets reacted on Friday, but I mean, this was as plain as day. Why are we still being surprised? Why is Janet Yellen and all of these supposed central bank gurus going, oh my God, I didn't know. I was surprised. I mean, it's rather astonishing to me.
Yes, it is. And I guess, for an explanation of that, you'd have to get Ms. Yellen on the show, Sean. But, from my perspective here sitting in
but she's not alone anyway. She's not alone, right? I mean, that regard, right. the sentiment, this show, we've got commentators on it all the time. Oh, inflation's not a problem. Everything's going to be great. There is a natural instinct towards the optimistic outlook. And then, of course, there's just the reality of Omicron knocked over everybody. Why wouldn't it knock over China? They're not immune.
Yes, and I think you've mentioned that the key country, China, right? And no one knows, as Dr. Aldo mentioned, it's up and down in China. So optimism on one day, lockdowns the other, and this is going to keep happening as long as China maintains this, or attempts to maintain an iron grip on COVID. So it's very, very hard to plan, as you mentioned. But sitting here in the Gulf, you mentioned the impact of inflation. Here in the Gulf, although everybody says that the Gulf has got lots of spare cash at the moment to actually handle inflation, and that's true at the governmental level with all the extra revenues coming in from the higher price per barrel. But on the street level, you can see that people are taken aback by some of the impact on inflation, even in the Gulf. So a very quick example is petrol prices. Right, because they have deregulated petrol prices here in the UAE, at least. Filling up my car when I first came to the UAE 15 years ago, I drive a very unenvironmentally friendly SUV, and it used to cost me less than 100 dirhams, which is about $30, to fill up my 3.5 liter car. And today, that same car, it costs me 250 dirhams, or something like, 80 American dollars to fill up that tank. So yes, we do see the impact of inflation here, even in the Gulf.
But on that point, Dr. Lee-Chen, the inflation story, and as it collides with the geopolitical story, is that the war in Ukraine is somewhat frozen in this fairly barbaric situation, but isn't resolving. There is no indication that over the hill there is a resolution. And what's also locked in, and that's my question to you, is the sitting on the fence option, right? There's so many, half of the world are sitting on the fence of not aligning or not condoning, and as a result, not compelling the wider side perhaps to move to a solution, that the whole world is contributing to its own elevated inflation. I mean, if all of the Middle East was suddenly to wake up tomorrow and say, well, sorry, Mr. Putin, you're wrong, we're against you. I mean, these would be fundamental impact, and yet they're not doing so.
Well, it's geopolitics, isn't it? So that's always the bugbear. The Middle East, or the Gulf countries at least, cannot risk just, siding with Russia completely on that, because OPEC Plus is the key platform for that cooperation. And Russia, even though the oil is under sanction, it is still the second largest producer in OPEC, together with the Saudis first and second. So that cooperation is absolutely necessary, and they are not just going to jettison that. So it's a question of, geopolitics, even though, as you mentioned, the reality is that, the fastest way to end the war, to probably bring down inflation, to probably restore the food, supply chains, would be for a quick end to the war. And that would be to throw in, the lot of the Americans or Europeans to try to pressure Russia. But hey, it's geopolitics, Sean.
Dr. Aldo, the same question to you. Ultimately, South America, Latin America has maintained to a great extent the same kind of neutral posture that India said. There was a great quote by the Indian foreign minister saying that Europe and America think that their problems are everybody's problems, but everybody's problems aren't Europe and America's problems. The outlook in this instance in South America, Latin America, that they've maintained to a great extent this neutral position vis-a-vis the Russia-Ukraine war. What is the outlook for that? Is that going to in any way alter? What do you think? Does it move in any way?
I think it will stay like this for a while. It might move with the coming elections in Colombia and Brazil. President Lula, more likely than not, will not be aligned necessarily with the U.S. position. He has been definitely neutral regarding the Russia-Ukraine situation. Colombia is a little bit of an interesting story with their second round for the presidential elections. It seems that we're going to see a candidate that is, let's say, not bound by the party discipline that we might know from traditional parties in the area. So it's not so clear where that alignment might be. But the region overall shifted leftwards. And it's unlikely that we will see it move wholesale in one particular direction. There's definitely countries that are closer to the US, but there's also many countries that would not want to be, that are not close, and others that would not want necessarily to be closer, that they will just remain in this more neutral position.
I suppose in some ways it is a reflection of how the failure of US foreign policy, that they can't carry the Americas with them in these big moments, because all of the other moments, they're obviously not doing a very good job in relationship building, it would appear. Let's go to the survey question and get everybody's view on this point. Can 40-year high inflation come down without an end of Russia's war in Ukraine? Now, despite all of these, China isn't or isn't open, or there's different messages of optimism last week, as Aldo pointed to, one day to the next it changes, but there are some very fundamental realities here. There's a big war in Ukraine, and the food basket of the world, and one of the world's biggest oil exporters, is under an embargo, etc. So can 40-year high inflation come down without an end of Russia's war in Ukraine? Dr. Lee-Chen, just looking to the week ahead on this point, we do have the Federal Reserve and other central banks, but the Federal Reserve up next, looking to increase interest rates to tackle inflation. That, of course, your outlook for that the week ahead and that particular point, that we may go into now a very more robust tightening cycle, and what the ramifications for that might be for the wider world.
Right. So definitely, as where the US goes with tightening up its interest rates, some of the countries which have pegs to that will also follow. So here I'm looking at the Gulf states. They will also probably follow the US lead. And of course, whether that's going to impact the Gulf a lot, I'm not so sure, because of all the extra revenue flowing in to the Gulf with the oil sales and oil prices. So, there could be a spiral where you tighten, but there's still inflation because of the high oil prices, and then you tighten again. So there could be just this problem of, stagflation, as some of your people have mentioned in the past week. But looking ahead to the week ahead, I also see something that's quite interesting that we should keep an eye on, and that's pressure by the US on the Gulf states. And here I'm looking at the UAE to try to rein in some of the Russian money or Russian yachts that have been parked here. And you mentioned earlier the failure of US policy to bring Latin America on board with the US on some of these policies to reduce support for the war in Ukraine. And I think the same thing is happening here in the UAE. Can the US put enough pressure on the Gulf states to try to rein in some of Russia's, the sitting on the fence people, to actually take a side? I don't think the UAE is going to take a side. It will try to sit on the fence as long as possible, but there are attempts at pressuring the UAE to try to sort out some of its money. It was blacklisted by the FATF. And so I think there are some moves to try to pressure them to take some action, at least against some of the oligarch money that's found its way here.
Dr. Lichted, just to follow up on the Iran nuclear talks, there was some reports last week regarding the lack thereof and Iran's advancement in its nuclear uranium enrichment, that we are getting to a point where the consequence of not finding an agreement on the Iran nuclear talks has to start surfacing. It's not just a nothing, right? I mean, what is your outlook for that, the consequence of what seems to now being a failed Iran nuclear agreement?
Well, I think for the consequence of that, Iran is just, if it fails, right? Let's assume that if it is going to fail, then Iran is going to still continue to try to export its oil in the gray market. I think the Russians are going to have to compete with the Iranians with deeper discounts. So we could actually see the two of them trying to outdo each other with deeper discounts. And I guess if you're fixated on the idea of trying to wean Russia off the oil money, then that's a good thing, because you're going to have the two of them competing for ever lower discounts, and Russia is going to draw in less money from its revenues. So for some people, that would be actually a good thing.
Yeah, we'll have to see on that. Aldo, last word to you. Result of the survey indications of, can we tackle inflation without the end of the war in Russia? No is the answer. That by 2-1, it's not possible to bring down inflation without, and with that consequence, Dr. Aldo, at least in accordance with what's declared by the Fed, that they are going to use all of the tools that they have, which the market is anticipating up to now, or maybe up till Friday, was going to be a few 50 basis points, but then halas, now could be something much more robust and sustained, where you're not looking at a 2 to 3% rate. Maybe you're looking at a 5% over the coming 12, 24 months. But my question, what is that outlook? What does that mean for the Americas? That kind of elevated price on interest rates at the Fed, the dominoes for the Americas.
a recession in the US and a recession in the Americas. And certainly in Mexico, that we'll have to follow closely on the policy of the Federal Reserve. But the recession is coming. Now it's not a question of if, it's partly when and how strong. It doesn't seem that it's going to be necessarily a soft landing.
There's a certain view, Aldo, on that oil prices can still sustain even through that inevitability that you articulate. What is your own view on that?
I'm skeptical. All this, this is a very different situation from 2008. But if you were 1 month before prices began tanking, people were not seeing that, right? And the narrative was of even prices going even higher, and people were caught in the daily feeling or assessment, and I'm afraid that we might be in a similar situation. There will be an adjustment, as people are calling it, the demand destruction. There will be an adjustment in demand patterns if prices continue to increase and interest rates continue to increase. We've seen that before. It's just not possible.
It kind of defies economics. I think there's this
Correct.
sense that
Correct.
there's this pent up demand spending, i.e. COVID, I've saved a bunch of money. I don't care if it costs me $40 to have a cappuccino, I'm going to have my cappuccino. But once you've consumed your cappuccino and you spent your $40, then what?
Exactly. It's not eternal. It's not, it's not a permanent income gain, and it's not a permanent demand boost either.
It's fleeting, like we've seen on occasion coming in to Dubai over the years, as money has come from elsewhere, and it's been short term, and then the outcome afterwards. Anyway, these are some of the big issues to be thinking about at the moment as we do week in review, week ahead, and no better than to do it with Dr. Aldo Flores Quiroga in Mexico and Dr. Lee-Chen Sim in Abu Dhabi. Thank you for your insights and your outlook today. Have a great week. We'll catch up with everybody 10:30 a.m. each morning UAE time for the Daily Energy Market podcast. All the best. Thank you.